a very tricky moment for the markets right now, David, because we're in this middle of another rise in interest rates we saw earlier in the year, and it's causing traders and investors to move a lot of blocks of stock around. You mentioned tech. All down today. In the last few days, they've been under pressure, actually, with the big cap tech names. But it's not apocalyptic here. I mean, Apple's 8% off its 52-week high. Microsoft is only 5% off its. It seems like it because we're moving down, notably in the last couple of days. Some move downs, of course, in semiconductor stocks as well. But again, maybe a little bit worse in terms of being off. But the main semiconductor index is only 4% off of its 52-week highs. We have weakness today in Intel, Micron. We're going to be waiting for Micron, by the way, after the bell with some of their numbers as well, but not far off of the 52-week highs for that as well. The problem is this is where the money is. 40% of the S&P is essentially tech, communication services, and technology. And when you start moving money out of that and into something like energy, which has had a great run in the last week and a half, energy is only 3% of the S&P, so the indexes don't really move here. So, yes, we've had amazing moves in Cabot. Cabot was $15 a few weeks ago. Look at it's $22 today. This is, I'm talking about 1 month. These stocks have been moving up rather notably, and they've had a good run overall, but they're only 3% of the S&P. So it doesn't move the S&P when people move out of tech so much and into energy, although it does move those individual energy stocks. These are all a little bit overbought right now. Meantime, bank stocks have had a good run, and one of the reasons the S&P isn't down as much is because banks have had a good run really in the last week and a half. About since last Monday, we've had nice moves up in J.P. Morgan, Goldman, Citi, tend to be a little more flatter today. It gets even more complicated when you realize industrial and materials should be rising a bit as the global economy recovers, but they have faltered this month because of problems over in China, because of additional quasi-lockdowns that's going on in different parts of the world. So companies that did well earlier in the year, like Dover and Illinois Toolworks, Caterpillar, Dow, and Freeport-McMoran, have all faltered. Again, this is not as big as tech, but it's 10% of the S&P 500, and that does have an impact. And then at the same time, consumer staples, another sector, have also had a tougher time this month as rates have risen. So Coke and Walmart and Kimberly-Clark and Colgate-Palmolive, they've all had a problem here. So put it all together, and it's just interest rates cause a lot of complications when they go up. Stuff moves around. You throw in the global problems with COVID and the Delta variant, it gets very complicated. It's not the apocalypse, though. Everybody gets worried about this. Even the Nasdaq 100, guys, today is only 4.6% off its 52-week high. That's it right now. The Russell, 3.8, and the S&P 500 is down about 2.5%, Morgan, this month, 2.5% this month, but 3.1% from its 52-week high. And again, you got to remember the indexes, the major indexes are all weighted towards tech. So you can have all the rallies you want in energy, but it doesn't really move the index that much. That's the modern way we've got to invest these days. It's all weighted towards tech.